Punita Kumar Sinha joins us, Managing Director or Managing Partner with Pacific Paradigm Advisors. Punita, good morning. Thank you for joining us.
Good morning, Nikunj.
Too early to say who the next president would be, but looking at the calmness in Asian markets and how Indian markets have opened, uh, frankly, the markets are saying that we welcome who the next president will be, but it is unlikely to have a disruptive impact. Can I say that is the market mood?
Well, I think it is still too early to say who will win, but it does look like President Trump could be coming back based on the results so far. And I don't think the markets would stay calm. Maybe it's a short-term boost to the markets. But I think the policies that President Trump might bring could create a lot of volatility, especially, if he raises tariffs on certain countries, how that counters China's fiscal stimulus, what it means for geopolitics. I think geopolitics, the landscape could change rapidly. There could be escalations in certain countries, by certain countries. So I do expect some volatility until we have total clarity.
So, what do you think would be the swing impact? Let's assume Republicans come back. What happens to the market then?
Well, I think the markets will like it short term because Wall Street has always been more pro Republicans. So the markets will like the fact that the capital gains taxes won't be raised, that there would be, potentially the tax cuts could come through. So I think from that perspective, yes, the markets would like, particularly in the US. Also in India, I think. The general view is that a Republican administration is more pro India because they're more anti-China and they need India more from that perspective. So India would also react positively in the short term. However, in the medium term or whenever, President Trump could have some very strong tariff increases. And that would impact some of the Indian companies as well. It would impact our exporters negatively. So it won't all be hunky dory. It won't all be positive for India and our companies. We would have to adjust to the new regime. And I think the more worrisome issue is what a Trump administration would do to the geopolitics. What would it do to the Russia-Ukraine war? Whether Russia would get even more aggressive, whether Israel would, get more aggressive, and what would be the countervailing forces on the other side. And so I think that could create volatility in the energy markets and the commodity markets as well.
Volatility, that's become the name of the game. Hi, Punita. This is Anisha also joining in the conversation. Wanted to get a better sense from you. What would this mean for flows into India? Because, of course, we have seen very heavy, FII outflows or an exodus of sorts in the month of October. And November, December are usually light when it comes to the FII activity. What do you think would be the trigger for them to come back to India?
I think the trigger for them to come back to India would be India's valuations. Right now, if you look at earnings momentum in India, earnings momentum has been declining. Earnings estimates, consensus earnings estimates are showing weakening on the earnings side. So, and valuations are still high. Although the markets have corrected a little, I think markets would have to correct a little bit more for valuations to start looking attractive again for the medium term. So FII flows may not change radically based on this election result.
Hi, morning. What's your sense as to what's in store when it comes to the U.S. economy? Perhaps from a market standpoint, as it seems to be indicating, it would be more favorable if Trump were to be in power. But what do you think would be some of the major tasks at hand or challenges that he needs to address immediately?
Well, I think the fiscal situation is one that everybody's concerned about in the US. US has been running very high fiscal deficits. And now the question is, the Trump administration would have to rebalance some of the tax regime, as the Republicans always do. They always roll back on certain tax increases that the Democrats have put in place. But then they have to raise tariffs, import tariffs. I mean, you do need the revenues. So the question is, how do you collect it, whether through taxes or through other mechanisms? And the Trump administration is likely to collect it through other mechanisms. And that would have an impact on, as I said, particularly exporters in India. And it could have some impact on China. Now, China's obviously been putting in a lot of stimulus. And if the Trump administration comes in and puts some strict tariffs on China, or takes a much harder stance on China, that could negate some of the positives of what the Chinese administration is trying to do. So I think that has to be something that one will wait and watch. But do remember that President Trump is 78 years old. He can be a little, from what we've seen, running up to the election, there is still a little bit of confusion on some of what he might do with immigration, what he might do, as I said, on geopolitics, what he might do on tariffs. And so all of those, and what that would mean for wage costs in the US, what that would mean for inflation and Fed rate cuts, all that, would emerge as we get more clarity on the election results.
So, Punita, if you have to, let's say, make a trade which could be a multi-year trade based on the change of regime in US, which is more tariffs, less taxes, more made in America stance, less made import from China stance, what could be that long-term trade or a beneficiary stock or a theme you would bet on?
I mean, for India, I would stay with Indian consumption, domestic consumption, and healthcare, travel, tourism, financials obviously is always a proxy to the economy. I would stay with something that is very made in India, because anything, as I said, that requires you to be dependent on the other countries, particularly US, could have some erratic policy making that could result in volatility. So and also given what is happening in the rural economy in India, we are seeing some distress. And from the companies that I've spoken to, that distress is now also filtering it a little bit into the urban poor. Um, so I would say that while consumption, also you have to be a little careful. You should stay in areas which are middle class, which impact the middle class and the wealthy, because that area and that pocket is safer than right now betting on the rural economy in India, or betting on anything that is very much centered around low income or urban poor, because those areas there still is distress, and that's what we're seeing coming through in earnings as well. So while I would focus on made in India and consumption and the Indian demographic dividend, I also would be selective.
Is that okay? Trump means, and I'm assuming that it's Trump, means anti-China policies will only get more and more aggressive. That means a big boost for Indian manufacturing, and post-COVID we've seen that theme really pick up. Electronics manufacturing, pharma, complex products. What about the other side? Bet on companies which benefit immediately because of this China rhetoric.
Yeah, I agree with you that Indian manufacturing, with our PLI schemes, those would be sectors that would benefit. So again, just like it'll be made in America, it'll be made in India. There will be, as I said, a changing geopolitical landscape, and there would be rise of nationalism across countries. Every country will exert its national, forces a lot more. And for that, you're right, absolutely, India manufacturing related sectors will also get more renewed focus.
time. Thank you for joining us.
If you like this video, then like, share and subscribe to ET Now.